So we've determined how we would need to see the monthly setup to get on board with that. Also the 2 week, and it does look like the monthly's poised to set up in that fashion. But to get on board with this, we would also probably need to see a retrace of some sort. Which is why, as of the key time period, being the month, being the start of the month, in this case the 2nd of December, we would want to see how the 4-hour chart perspective is set up as of the 2nd, and then we would wait for the 4-hour chart perspective to set up appropriately as to however it must do so to go on side with whatever post direction is poised to unravel relative to the monthly and the 2 week, and then like all the time frames below, so the 4-day, 3-day, 2-day and daily, or primarily the 2 week to 2-day, and in this case it was just 2 week and 3-day. But anyway, yeah, so the daily, you can see here, push lower, which was a continuation, which was just an impulse. Like to be fair, all in-play and pushes are just retracements and stuff. Just always, like, retrace. It's always a retrace. Like, they are all retraces. Like, for example, push to the downside. Like, a retrace and an impulse. Because it came below this push. Retrace it slightly. Retrace. And then this push kind of came to an end as of this bar close. It was a bit to retrace, but then it came impulse, then retrace slightly, retrace. So it's all retracements, but like here, impulse, it's like they keep impulsing because participants have not traded in a fashion what's presented info relative to the price structure, what I'd say otherwise. So, but we would definitely have this discerned, the daily and push, in-play and pushes range, yeah. And then anyway, I just want to see when I actually done this. I think it was the Saturday. Let's check. If it was, then that is a very important day. Don't think so. Here we are. 11th. Is that 11th? Yeah, here. Damn, time goes so quick. It's been a week ago. Oh, me. Feels like yesterday. No, actually, it does feel like a long time ago, to be fair, to some degree, but still. That is pretty mad. Anyway, yeah, because this is when I was looking at the Nasdaq, which I think was on the 9th, and then this was the last time we were doing FX replay work. Hang on. Yeah, no. Anyway, yeah, I don't think so. It was on the 9th. But anyway, yeah, so let's analyze the chart. So I'm literally going to do it for real. So this goes into this, so you would be just having this data available. So you see what I mean though? Like, you can just analyze the data, like of how participants have traded, like, or been trading, like, over, for example, 4-hour time periods in one comprehensive snapshot, like, and how that's been unfolding over consecutive running time periods, and the trend that's emerging. You can keep track of it so much more easier than looking at Bookmap, for example. Yeah, you can see a bit more nitty gritty things, like, yeah, yeah, you can see a bit more nitty gritty things. Like for example, the intent what comprises the 10 out of 10 minute bar close, but what good is that? It's like you can look at it yourself. It's good for context of like, yeah, okay, bot has been traded in this way within this time period and contributed to this bar looking like this. Okay, right. Doesn't really do much for you though, does it? So, but anyway, if we were to get on board with this post direction that's likely to unravel up to this point, and this would be like the cutoff, and I'm just gonna look to the left here. Yeah. We would want to see a retracement below at least this low. So that would be the first step, and then basically, actually, hang on. Yeah, I think the first step actually would just be assess how the market comes down to here, but you definitely wouldn't want anything else. And then you would discern the in-play at-hand push that's in play at the time of when the market pushes down to here. So like this. I've already done it. So yeah, you would just be waiting the next bar. And then yeah, to be fair, minimum actually would want this, to be fair, which it actually came below anyway. And then this bar came, yes, it is poised to primarily push to the upside, but this bar closed right after primarily pushing to the downside, so you would kind of want to wait. To be fair and honest. And like, what even is the in-play and push? Looks like went down, up, down, like this. Yeah, so you could. So I think I had been assimilating this as the entry, but to be fair, I wouldn't have took that. I mean, actually, now that I think, did it push? I mean, to be fair, the actual low would be, that's what I would take for the 4-day coming down to the retrace. Now, if it actually did, that would, okay, so it came down pretty much exactly. You know, that's 2 week, something like that. I don't know, right off pushing to the downside, but then the 3-day intent is poised pretty bullish. And then so is the weekly and 2 week. Actually, no, I probably would take this. Yeah, I would. So, and even if you did take this, it probably still would have resulted in a win. Yeah, it would. See, so yeah, but the thing is, you're not making decisions within 1 minute to 5 minute less fragments of time. You'd have 4 hours, and plus I wouldn't even have this time anyway because I'd be at work, so I wouldn't have been able to enter anyway. But if I did, I would have had this, and then my stop. This would be the initial low. I would at least want my stop about here, so that's there, and then I'd want to get a 1-to-1 to that region. So I would have entered there, and you can get a 1-to-1 to like at the high or just below, then yeah, go for it. But if you can't, then you want to be specific, right? And then you also don't want the playable range at the time of when an entry sets up to be closed in fully. I know it did close in pretty much, but it didn't. If it went any higher to about here, then yeah, you would probably want to cut it. But no, this is okay. And then anyway, it trades down here, and I actually probably would have caught this. Yeah, I would have. Yeah, I actually would have. And then you would have entered here, right here, and then it just shot up. That was pretty nice, and that was actually, I think, the entry Andrew took. Yeah, it was actually. That's pretty interesting. Um, oh, well, yeah, that is actually pretty interesting. Because he also does go pretty much based off the higher time frames, and yeah, that wouldn't surprise if. Well, he didn't. He definitely didn't go like undertake that procedure. But anyway, yeah, we revealed something interesting there. To be fair, adding more significance and weight to this. So yeah, and anyway, once like the market trades like even to about this region of this, like, let's call it playable range relative to the 2 week intent. What like we are anticipating within this price region from the 2 week bar close, that participants are likely to maintain a certain size intent for up to like throughout this region here. Now, if the market trades to about here, I would probably cut off, and then yeah, if it traded to even, I don't even know, if it traded to about here, I would still keep the bias to look for a setup, but yeah, that is definitely over. That's pretty much closed the entirety of it in, and then not sure what happened, but yeah, I didn't set up anything here. But yeah, right now this looks pretty decent to go lower. So there's based on this wick rejection, you know, right at the highs after participants have already traded in the way they have, and you know we can actually see that with this bar like real time too. I don't have real time data on here, but if I get this, oh, that doesn't look good. 12706. That looks like it's been bid up again. But if we go like this, we can see the 4 hour bar close. Hang on, what the fuck? Oh shit, yeah, so this is the, so yeah, that's the delayed, but this is the real time. So we will see this on here. Oh shit, that does not look good. Oh. Oh shit, that does not look good. Whoa. Whoa. Yeah, that does not look good, man. This does though. This is set up pretty nice for bears. But if we were trading this, I don't know. Let's have a look. Oh god, this does not look good, does it? No, 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 no. Yeah, look at this. Looks poised to keep pushing higher. Daily. It was set up right, as like the daily looks good to set up appropriately relative to the 2 week, as I said this morning. This is a valid trade for sure. But this does not look good for us at all. This intent looks pretty nice to keep trading with the prices that are available on the buy side. But if we, yeah, so look at the 4 hour, so this is a 4 hour close. Oh, that's making us sweat a bit. Yeah, it's probably over. Oh shit. Well, we can see the actions what they must take, and this liquidity's coming in right at our stop. So, we can see those actions what they must take. That'll contribute to whatever way they. This is the 4 hour bar close, but well, it'll contribute to whatever way the market pushes, like as of how participants trade out with these prices what are available right now. And based on how previously participants have been trading, like it's likely that they'll trade with the buy side primarily. Doesn't look done yet based on the structure, but like the 4 hour bar close did close okay. The 2 hour closed pretty nice for bears, but you know, I would probably go with the buys, I'm not gonna lie, if I was trading 3. But I would have wanted to see hang on. Yeah, actually, yeah, I would have wanted to see a nice 1 hour bar close here. Yeah, and yeah, a nice 1 hour bar close, because like the 4 hours quite iffy. You know, you've still got the Europe in play trade, and the daily, the 12, the 16's pretty bearish, the 8's still pretty bearish, the bullish, sorry, the, you know, oh, I like that. I can see that wick reject. Come on. But yeah, it's a bit of an iffy situation, but I would go on the buy side, I can't lie, based on the higher time frames. Because look at how fast all these orders had executed. Market buy orders. And just traded with each of the bids that were available to do so. Like, look, it literally swept the market. I think this market moves in tick increments of 1 pip out. So yeah, 97. So 98, 99, 90, 0, 01, 02, 03, and then ultimately 04. That's quite a lot of levels in that. Look at the milliseconds. You can see, like, it's pretty crazy that. Anyway, this bar's now forming in a fashion which doesn't look that good. Yeah. Like, the market is trading in an area which is pretty iffy. Like, I mean, the daily, the 12 hour, 16 hours poised for pretty bullishness to continue. But in order for that to continue, you would want to see them. You would want to get on side with that direction in the most appropriate way possible, which is how next step lower time frames are set up, and whether they are set up in a fashion what either suggests the market that you just keep pummeling to the upside, or whether it's poised to actually set up in that appropriate fashion first, meaning push in that direction first, and then push in that direction. And that is actually the case for us today, which is actually on our side, therefore. And how we said would be most probably likely was we'd want to see the market come down to about here. Now we can see it's quite overextended above the EMA, which is good for us too, which with how participants are trading like here. Now if you track the 15-minute trends, you can see this. So the interest participants are exhibiting after they traded in the price coverage of the entirety of the previous set and push, which is that the external. Yes, this is the external. So we are bullish external, but the way they are exhibiting interest with the price what are available at this point in time on this occasion right now is of the sort of bearish intent. No longer, if this bar closes like this, it would be of the sort which is poised to retrace lower. And I would go for about down here, but that's still not down here, which our stop is, our take profit is about here. But if the market gets below here, I will, I don't know, I'll probably just stick it out, I can't lie. But yeah, anyway, it is a bit promising, this, to be fair. But yeah, the context of where the market is actually auctioning at right now, the prices that are available and define the market, and the context of them, it's relative to 15-minute, it's overextended. And you know, it hasn't been going on for that long, but it's been such a short span of time, and such a big burst of or spurt of energy that's went into driving the price up to this. You're not going to go that long, are you? It's like balance. It's the universe, pretty much, isn't it? You're not going to be able to sustain that, are you? So that's a type of overextended in the markets. And then another overextended is just where you've got many time periods consecutively in a row like this, where participants just maintain the same sort of repetitive intent for the same type of time period repetitively, just non-stop, and then eventually they start to show signs. To be fair, if it's been unfolding over this long, this amount of time, it would probably be best at looking at it'd probably be best also possibly looking at that on a bit of a next step higher time frame and tracking it. But yeah, because I mean, you kind of got mini pauses here, but then just keeps getting overextended, etc., etc. But yeah, anyway, this is an update a little bit, and hopefully this comes down.